Welcome to the deep dive. We're here to plunge into complex topics, pull out those crucial bits of knowledge so you walk away really understanding things.
That's the goal.
Today, our mission is, well, it's to demystify one of the biggest and honestly most dynamic financial markets out there, the Forex market.
Absolutely.
Our deep dive comes from sources like Forex trading, essentials, benefits, and risks. We want to unpack its sheer size, look at the opportunities, and really importantly, shine a light on the risks involved.
And you mentioned size. It's genuinely hard to overstate. We're talking about a global marketplace, buying and selling currencies. Over $7 trillion traded daily. That's the 2024 figure.
7 trillion daily.
Yeah. It just dwarfs stock markets in volume.
Yeah.
It's behind almost every international transaction imaginable. Imports, global investments, everything.
That number is just staggering. It
Yeah.
really is. So it makes you ask, for someone just trying to get their head around something that huge, what is the Forex market fundamentally? Like beyond just swapping holiday money.
All right, so Forex, or FX, it stands for foreign exchange market. And yeah, it's much more than changing money for a trip that's just a tiny piece of it.
Okay.
What's really going on is banks, corporations, governments, even individual traders, they're all exchanging currencies constantly on a massive scale. And you're never just buying, say, a euro in isolation. It's always relative to something else, which is why everything happens in pairs.
Pairs. Okay, so always two sides. Like USD, that's euro versus the US dollar.
Exactly. Or USD INR, US dollar against the Indian rupee. Or GBP-JPY, the British pound versus the Japanese yen. Loads of them.
And what do these pairs actually tell us? Why is that the core way we look at these trades?
Well, the pair shows the value of one currency against the other, and that value is always shifting. So if USD moves from, say, 1.10 up to 1.2,
The euro got stronger against the dollar.
precisely. And those relative movements, those shifts, are what traders are trying to profit from. And what's fascinating here is how it happens. There's no single central stock exchange building,
Wall Street to
Yeah.
Forex.
Kind of. Trades happen directly between participants. It's called over-the-counter, OTC.
OTC, we hear that term a lot. What does that actually mean for like the mechanics of trading? Does it change pricing or?
It means you're usually trading with a bank or a broker directly, not on one central public order book. So yeah, you might see slightly different prices from different brokers,
Okay.
and it affects how quickly orders get filled. But paradoxically, the sheer volume in this decentralized network is what gives Forex one of its biggest advantages.
Which-
Incredibly high liquidity.
High liquidity. Okay, that sounds good. Makes me think of water flowing easily. What does that mean practically for a trader?
Think of it like a massive, constantly busy highway. Cars entering, exiting all the time.
Right.
With Forex, because there's so much activity, there's almost always someone ready to buy what you're selling or sell what you want to buy. For most major pairs anyway.
So you can get in and out of trades fast.
Very quickly, yeah. And usually without your trade itself causing a big price jump or drop. It also means there's generally less risk of price manipulation compared to, say, smaller markets.
That makes sense.
And all that constant activity feeds into another benefit. The market is open 24 hours a day.
But 5 days a week, right? Monday to Friday.
Correct. Monday to Friday, it rolls through the global time zones, Sydney, Tokyo, London, New York. So it's always open somewhere during the work week.
The market literally never sleeps then during the week. You know, one thing that always struck me about Forex was this idea you could start without needing like a fortune. How does that work? Is that really true? What's the secret sauce there?
Well, that comes down to leverage. Leverage is the key.
Okay.
It lets you control a large trading position with a much smaller amount of your own capital.
Yeah.
So, for example, maybe with 1 to 10 leverage,
Yeah.
your $100 could actually control a $1,000 trade.
Wow. Okay, so that magnifies your potential reach?
Exactly. It multiplies potential returns, which is obviously a huge draw for people. But, and this is critical,
There's always a but.
always, it's a double-edged sword. It